Good morning and welcome again to Time and Price FX. Today we are considering the S&P 500 cash index. So we are in the month of December, and like I like to say that in December we do not trade actively in the market. We just observe. We took our last live trade last week on Tuesday. So right now we are just observing the market to see what the market has been doing and what it will maybe try to continue to do today. So today at 8:30 a.m. New York time will be the release of CPI data, and just looking at market structure, we do not know yet what the market is trying to do, and you're not trying to give anyone an idea going into today's data to say Time and Price FX said this or to do that. So yeah, we are just observing the market to see what the market does. But what we have here on the 4-hour, maybe let me go to the daily time frame first. So on the daily time frame, we see here that we've had a break of market structure here. That this swing low here was broken, and by this bearish candle and some others here as well, and then the market has been trying to go back into premium to maybe frame another sell, or maybe to continue the current trend. So going into today's trading, we're expecting the market to reach into premium, and from premium then we'll see what the market intends to do from there. So going into the 4-hour time frame, we see there are a lot of inefficiencies here, what ICT calls fair value gaps that have not been filled. So this is the premium that we are anticipating the market to reach into today. So as you can see that also there's very large fair value gap has not been filled all the way up to the top as well. So we're expecting these two premiums to be reached into in today's trading. So those are our two expectations going into the market today. Forgive me, these two are not properly lined up, fair value gaps. Yeah, but that's what it is today. But before we try to frame ourselves, let's see how these 2 points here traded. Let's see if they followed our the model that we trade here at Time and Price Forex. So going down into the 15 minutes time frame, let's see if we have that model in play, and let's see how you as a trader could have framed these two opportunities here in the market. So after breaking low here, we broke a swing high. Excuse me, let me try to sort this out. So sometimes, like I said, we're in the month of December. So your setups are not always going to be straightforward. As you can see here, we had this break of market structure here, and we also had it right here. We had break of market structure here as well, and then the market. We remember you have to wait now for the market to return into this fair value gap that we see created here. So when the market did return into that fair value gap, it broke down this swing low. So here now, if you place a trade here, your trade could have been in a loss, and then yeah, this is why we try to avoid trading in December, because of these very reasons. So here now we see let's try to identify a swing high. We have one here, that is one here, and then yeah, Then we have another swing high here. Excuse me. We have another swing high here being broken, and we have, let's see, a fair value gap somewhere here. We have a fair value gap somewhere here. Let me give this one a different color. Say, let's say red. So yeah, we have a fair value gap there. Sorry, this is the fair value gap is here actually. Fair value gap is here. Also here we have a small fair value gap, but besides the point, so your trade would have been here. Your buy limit would have been here. So your buy limit would have been, you would have been in this trade targeting this high over here. So that would have been the trade. So yeah, and then stop loss at this low over here. Let me try to place it like this over here, targeting this high over here. So yeah, this would have been your trade. You see, we have the risk is 0.3% and the target is 0.71%. Risk to reward of about 1:2.4 R. Not a bad trade at all if you have good equity. So yeah, that is the first trade that we see here. Now let's try to analyze the second trade. So after this trade went on here, we didn't violate this low over here. So let's see if we are going to have another trade over here. So since we didn't violate that low, we are still looking to go long. We are still looking to trade higher. So let's see, let's say go to the 5 minutes time frame. Okay, so in the 5 minutes time frame, in the 5 minutes time frame, let's try to frame our buy. So I think this is the low we've been talking about. Let me just confirm it, excuse me. Okay, so let me delete this, and then let me place this. Sorry, let me place this over here so that I don't forget where it is. Going to the smaller time frame. Yeah, I had a feeling. So yeah, here we go. Going into the lower time frame here in the 5 minutes, let's look for a swing high. This is our swing. Let's see. Our swing high here is not quite clear. No, that's not a swing high. So yeah, it gets very difficult when you're trying to trade these markets and these numbers. Just do yourself some justice and lay off. You'll see the markets in the next coming year. There are a lot more opportunities. You wouldn't have missed out on anything really. I know a lot of us, especially young men, young women, we are in a lot of pressure to provide for our loved ones or families. Some of us are working far away from home. Going back home, you have to go back or something. That's just how it is. So even in that pressure, do not try to take trade. in December, because you know the market will just move against you. So looking at this trade here, you see we have our highest swing high here. Let's try to extend it, and then let's try to give it a different color, say black. Alright, so we have a break of metastructure there. Call it BMS, BOS, still the same. Place it right over here. So this swing high was broken somewhere here. So we have to now check if our market came down into equilibrium. So go up all the way here. And we see that our market just failed to reach equilibrium on this candlestick over here. So it failed to go into a discount market. So if you are that kind of trader who's going to wait for equilibrium, you would not be in this trade. But one thing ICT teaches as well is that once the high like this is broken, it becomes now discount, which means you can take a trade at this high over here. So if you are that type of trader who can be willing to trust the market, yeah, that could be your trade. Your trade could be right at this high. So right on this high here, you can take your trade. You see that the market just comes down on this high and goes up even some more. So that was your trade there. So that is just one thing I also taught you today that maybe you didn't know. So yeah. So like I said, today we are just analyzing the market. We are not taking any active trades. We are just looking to see what the market is doing. So yeah, we have some frolicking. So if you took this trade down here, your target would have been this high over here, and you see that it has been met. Your profit target would have been met. So you see now we come back down again, and then we go up. So there's a lot of frolicking around in December that you're able to see. So what we just saw here is that we are taking trades basically in a consolidation. Yeah, see here we're making some higher highs, of course. Sometimes we are making lower lows. So we are basically in a consolidating market right now. So should be very wise into how you frame your trades. Yeah, so that is basically what we have for December. The advice is to avoid the market in December, because you know people with money are out there in out there in Dubai, they're out there in the private islands. You know, I'm talking about hedge fund managers, you know, trading institutions, bank, you know, all those people are relaxing. So why are you still struggling alone in the market when smart money or money that matters in the market is just chilling somewhere else? You know, people with money are just chilling. You know, so chill. Also, you'll see the markets next year. Don't try to prove points to yourself or to anyone that you can trade in December, because you'll be hurt, of course. And then when you take those losses, it'll be also on you. So try to preserve your capital. And I'll see you in the next video. And if you find the content of this YouTube channel helpful, kindly consider subscribing and liking the videos for the YouTube algorithm. Thank you.